Are you surprised by the RBI move that they did not hike the rate and only changed the stance to a calibrated tightening one? Are you disappointed by RBI policy or pleasantly surprised?
I am not at all disappointed with RBI's policy. In fact, I am pleasantly surprised. I was personally expecting a 0.25% increase in interest rates, and that did not happen. I was worried more on the inflationary front, and RBI came out with a statement that the expectation is that the inflation for the quarter would be 4%. They've actually lowered the inflation expectation. So really, apart from currency, there was no real reason for RBI to go and increase interest rates. We have seen a lot of growth coming about in the Indian economy, and to my mind, increasing interest rates would have just negatively impacted that growth. So to continue the growth momentum, RBI has done, in my view, the right thing, which is not increasing rates.
Change in the RBI stand does rule out any rate cut. However, it does not mean either a pause or hiking rate depending on the macro situation ahead. Your expectations for the remaining part of the year?
Currently, I don't think anyone expects or should expect that there would be a cut in interest rates. So the current policy would clearly should reflect the fact that it is unlikely, and one should not even expect any cut in interest rates. Would interest rates go higher over a period of time? I think it is going to be very, very data dependent. Difficult to take a call, but yes, it is possible that over the course of the year there would be a rate hike that would happen. The rate hike that the market expected this time can happen in the next policy. That is possible.
Right. You know, the rupee did react adversely as RBI did not hike rates. RBI has clearly sent a message that the focus remains on inflation and that mandate doesn't change, rather than using interest rate hikes as a defense to stem the fall in the currency. Do you think this approach is a bit risky, given we are staring at, well, financial crisis may be a harsh term, Mr. Mistry, but even so, coming close to the heels of maybe a disarray in the financial markets?
Well, first of all, I don't think we are in any financial crisis, as you put it. The problem is the currency. The currency is certainly a matter of concern, but increasing the interest rates by 0.25% was not going to, in any material impact, have a positive impact on the currency in the medium to long term. The impact, if any, on the currency would have been very, very short-lived. So therefore, fighting currency battle by increasing interest rates is probably not a strategy that RBI would like to adopt, and rightly did not adopt it that. We have seen in many economies all over the world that when the central bank has tried to fight currency or fight the local currency or defend the local currency by increasing interest rates, it's not worked in the medium to long term. So I think RBI has done the right thing.
And that is primarily the reason why I said this is a bit of a disarray rather than a full-blown crisis. I think we're just trying to join the dots and make sense of it all. But how do you see business getting impacted given the stance taken by the RBI? Because I think calibrated tightening means that there won't be any rate cuts, but there could be rate hikes in the future, data dependent. But how much do you see the cost of funds getting increased for you at HDFC? And how should the financing industry prepare itself for a time where the cost of capital is going to go up?
We don't see cost of funding increasing in any significant manner compared to where its cost of funding has increased over a period of time, and lending rates have been increased in proportion to the increase in cost of funds. So my expectation is that spreads will remain stable. Someone like HDFC has gone through several interest rate cycles over the last so many years. We have been in high interest rate environment, we've been in low interest rate environment, and we've always managed our spreads within a narrow band. And we are confident that we'll be able to continue doing so.
Right. Do you see spreads, margins coming under pressure for HFCs? What about HDFC?
We have gone through different interest rate environments over the years, high interest rate, low interest rate, and so on and so forth. And if you look at historically all the data which is available on our website, you'll see that irrespective of whether it's a high or a low interest rate cycle, our spreads have remained stable. So we continue to believe that even in this environment, our spreads will remain or continue to remain in the band in which they've always been, which is 2.20 to 2.35.
RBI mentioned on NBFCs that NBFCs should be prudent on ALM management and that they may come out with norms for asset management. Your expectation on the same?
I think RBI should rightly do something on this because there should be some restriction on how much companies should borrow in terms of short-term money. But there should be a proper evaluation of or a proper ALM management system that needs to be put in place for everyone. So I guess what RBI will come out with in regulation is limiting the amount of money that NBFCs can borrow through short-term paper like commercial paper and things like that.
Do you see any other regulatory measures coming from RBI on NBFCs?
I don't know. I mean, that's something we'll have to wait and see. I don't see anything on the horizon. The concern at this moment is on ALM management because of what happened in one company, which is ILFS. I think the markets have been sort of overreacted to this one problem, and the markets do not reflect the true strength of the Indian economy. Our economy grew last quarter by 8.2%, and RBI's own forecast is that the economy will grow by 7.4%, making India one of the fastest growing economies in the world. So given that, I think this pressure on the rupee, to my mind, is unwarranted. Yes, the rupee should have weakened from the levels which were prevalent a year ago because all emerging market currencies have weakened. But the pace at which the rupee has fallen in recent days is completely unprecedented.
Quite a few NBFC players have lowered growth expectations. Do you see lower growth for housing finance as a new reality?
No, we don't comment on financial numbers, but we have always guided the market towards the growth. We have no reason to revise those growth numbers, none whatsoever. We would expect to continue growing at the rate that we had set for ourselves.